Bitcoin bulls stampede through 65K on revised Q2 economic data. Hey guys, it's Keith Allen, and I'm not going to lie. I was writing my analysis this morning, and I woke up to a nice rally past the 200-day moving average after incidentally losing it yesterday briefly. And so was writing about, what it was going to take to break through 65K. And as I was writing it, we actually, boom, broke through 65K. So we're climbing in fresh, and things are pretty hot right now, as you can see. For those who are watching the charts anyways, the price did pull back after that initial push, but that was kind of expected to see some profit taking. So we're going to climb in to the charts and see if we can identify any dynamic shifts in the order book that might clue us in as to whether or not this is going to be sustainable. And we'll also, of course, take a look at the data that I think inspired this move. So before we do that, just really quickly, if you like the streams, if you like the content I'm providing here, do me a favor, smash all the buttons, and by all means, leave a comment. On that note, live chat comments are open. So please feel free to chime in and join the conversation. Would love to have you. I'm going to give you a second to make sure you hit that little bell up there. Oh, it's actually up on that side, to subscribe so you don't miss any of my future live streams. And please do me a favor, share this thing. I'll give you a second to do that, and then we'll get started. All right, long enough, right? Let's start here let's go ahead and start on FireCharts, and we'll take a look at the candle chart as well and see what is going on here and what might transpire after this. As you can see, we had really all classes began buying here shortly after Fed Chair Powell, not Fed Chair Powell's, after the economic data was released. Fed Chair Powell, incidentally, was speaking today, but I didn't realize until the time came that it was actually just a pre-recorded intro to a Treasury meeting. And maybe the results of that meeting, I don't know. I didn't actually get a chance to listen to the whole meeting, so maybe there were some things that came out of that as well that gave investors and traders some optimism. But as you can see, this big move here, where all classes began buying. Let's switch the FireCharts absolute CVD over so we can see exactly how much actually came through at that moment. We had lots of resistance up here. About 36 million right there at 65K, and it was insulated up and below it and above it. 12, 36, so that's what, 48 million, and another 10 million, 50, 6, almost 70 million, right? Did I do that right? 30, 36, 48, and another 10, so we'll call it 58, almost 60 million, just in this little range right here. And so if we look at this in terms of absolute value, we can see that there was at this stage all order classes, and this is, of course, market orders that we're looking at here. We're minus 14 million, and really just on that explosive move, we'll call it 10 million, 10.5 million, and then came up to what? 69. So 79 over almost 80 million in market buys in like minutes. Took this out. And so now obviously a bit of a pullback. Profit taking at that point was expected. And so that's what we're seeing at this stage. So is this going to be sustainable? Are bulls going to be able to run back, continue to push up through this? Well, time will tell, right? We need to see some of this liquidity continuing to move up. But the really important part of it is the fact that this has been a big barrier for quite some time, and we've just taken this out. This is a significant amount of liquidity in this range that now opens the door to more potential upside into the 69, 70K range. So let's first take a peek at the data that may have triggered this. We did get some new economic data this morning, a revision on Q2, so final revisions on GDP growth, and that fell in line with what was forecasted. We also saw the GDP price index in line with what was forecasted. Jobless claims down slightly from what was what was forecasted on initial claims and continuing claims also. Um, well, not hot, we'll say, right? Pretty much in line with what was forecasted. So that's also good to see. Core PCE, these again, these are final revisions from Q2. Core PCE prices down a bit, right? In line with expectations, down at 2.8%. Corporate profits up, beating expectations. That's obviously very positive for the economy. So these are the things that we're looking at. Jobless claims 4-week average also seems to be down slightly from what was forecasted. So these are all things that point towards a stronger economy than many people expected. So maybe, just maybe, this is a glimpse of how the Fed is trying to navigate towards a soft landing. And this at the moment, because this is an organic living, changing beast. But at the moment, these are positive signs, and the market obviously responded positively to that. Tomorrow, we have another set of data coming out for August. And we will, of course, have a monthly close coming up here very, very soon. So what? Monday is the monthly close. So that kind of opens the door for some weekend volatility. And so does, mind you, so does clearing out liquidity right here, right? When we clear out a big wall, this makes room for some volatility to go. Obviously we could go in either direction, but you see the 50K range thinning out here as price moves through what was prior resistance. So what are the technical things that we need to be watching here? First of all, and you'll notice I'm here on a 4-hour chart, on the Bitcoin chart, on the 4-hour, from the double bottom, we're seeing, obviously a series of higher highs dating back to earlier in the month on September 6th, series of higher highs, obviously good to see. If we tighten up, if we zoom out a bit, we're going to see that we actually seem to make a higher high. Did we make a higher high here on the daily? We just barely squeaked one out, right? The high was 65,103, and here we're looking at 65,241. So that does technically make a higher high. We're above the 200-day moving average, which we lost yesterday and now reclaimed. And so, as I mentioned earlier, it was that rebound from the 21-week moving average that is thus far held so far this week. And we tested it. We came right down to the line last night. And so far, that's looking good. But you see now that we're pinned in really a very tight range, once again, between this 21-week moving average and this 2021 mid-cycle top. If bulls can build on this, we now go into what I think has been our strongest technical resistance for several months, dating back to really early March, when we first cracked through our prior all-time high at the 2021 top at 69K. We had a brief, rally up to 73 and change, and that is now the number to beat, right? For Bitcoin to get into price discovery mode, we got to move above this, but one step at a time. First thing I need to see is full candles printing at least above the 200-day moving average. And then ultimately this 2021 mid-cycle top. I think this is just going to be a range game where we go level by level until something pops and sends this over the top. So I would not be surprised to see the ranging continue with the potential for more volatility as we get around this monthly, quarterly close. That's going to be very telling where we close here at the end of the month and quarter. Let's take a look at that just at a glimpse here. You can see that we have obviously very, very tight levels here. This was on the monthly basis, the higher is at 65,568. So we got a few $100 to go to get above this on the monthly, which is good. That's certainly in range, and we are, at least at the moment, on a trajectory to close green. But really, the real resistance, the real higher highs that matter most are up above here in this red zone, 71.9-ish. And then we're in position to go after the all-time high. Going to take a lot to get there, in my opinion. And so, like I said earlier, baby steps until we can clear these levels. This has been, as I've discussed many, many times, the 69K level has really been, even though it may, we have other technical resistance that is potentially more important here, like up here in the 71.9 range. This has proven to be really the strongest and most important resistance level on the chart, as far as I'm concerned. You may have different opinions, and that's fine. But in my eyes, until we can clear that 69K, and you can see how many times we have interacted with that level and been rejected, until we can clear 69K and print full candle bodies, which you'll notice, right? Only a few times has that happened, right? And it's only for a day, right? We cleared it once, we got rejected. We came back down, got another attempt. And if I switch on trend precognition, you'll see how those topped out. And we even had signals to show us where those were topping out. Rejected, and continued to reject time and time again, right? We kept having wicks down below. This one just barely held above briefly, but trend precognition told us it was going to go down, and it did. And so this has been dozens of rejections from 69K, the prior 2021 top. And that is the level that we have to conquer to put ourselves in position to really print those meaningful, sustainable, what I think would be a sustainable rally to a new all-time high. So yeah, we could wick up to this 71.9, but if we're not printing full candles above this 69K level, then I would question whether that is sustainable or not. So that's what I'm watching at this stage. We're hovering around this 65K level right now after a nice little surge above. A bit of profit taking happening here at this level, but you can see that there is some bid liquidity moving up into this above the 63K range. And so let's drill into this a little bit more and see if we can see more granularly that we are again going after these levels here. And yes, there's a bit of profit taking, but the fact that whales are buying into this liquidity is a positive sign. And we'll watch to see if this continues to move up, right? So yeah, this seems to be that dips are for buying at this stage in the game. The caveat, of course, is a dip that would take us to through support that might not be sustainable, and this is where I would question that. Right, in my opinion, if we lose this 21-week moving average, we're likely going to go back and retest support, maybe down here around the 50-week moving average or the double bottom here, which these are all kind of closely correlated. And then, of course, if that breaks down, then we've got this trend line coming into play, which would be a great buying opportunity, but would wreck a lot of people along the way. Gonna leave it right there, guys. If you're interested in the tools, by the way, we're running an awesome partnership deal with our friends at the Kingfisher, the makers of these fine liquidation maps, which basically at the moment this is showing that shorts have been liquidated, and now we have a series of longs who might be in jeopardy of getting liquidated. Let's refresh this and see if this has changed any. So yeah, keep that in mind. Great deal for you. And of course, if you're interested in that, you can check out the link in the profile. There's also a post on the Twitter page that shows you basically you're going to get 3 months free when you sign up for a year of Material Indicators Premium Plus. You'll get a chance to an offer to buy a 15-month subscription from the Kingfisher for the price of 12 months. You get the same great offer if you purchase an annual plan from the Kingfisher. You get the same great deal on getting 3 months free on an annual Premium Plus package from Material Indicators. You'll find links in the description. And thanks again, guys, for the support. Again, if you like what's going on here, do me a favor, like, share, and comment. I promise you, I will engage with each and every single comment because I always do. Going to wrap it with one last view of FireCharts. Let's zoom out a little bit so we can gain some perspective on what lies ahead here. Obviously, strongest resistance here in this 70K range, with 69K having obviously some technical implications that I shared with you a few minutes ago. All in all, a pretty good day. Looks like one comment coming in here. Let's see. Oh, yeah. Hey, thanks, Alexander. I appreciate it. I appreciate the support. As always, you guys, as always, have a great day and trade safe, my friends.